This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. We're going to talk a little bit about the market today. I'm going to cover the four indices, the spiders, the Qs, the DIA, and the IWM. And I want to make sure we cover a few other things. I'm going to talk a little bit about sentiment, which is making an interesting move, and also volatility. So just to give you a little background, I have been providing stock research and consulting to institutional money managers for the past 30 years. And so I'm trying to show you how I've done some analysis for them over the years in terms of helping them improve their timing. Most of the guys that I deal with know what stocks they want to own, but they use me to help with improving their entry and their exit points. So that's what I'm trying to show on this channel, different strategies that I've used, my methods that I have used to improve your timing. And I look at multiple time frames. I look at key moving averages. For me, I use an 18 and a 40, and then I use MACD and ADX. So those are kind of like, that's what's in my toolbox. And let's go ahead and get going into this analysis right now. So I'm going to start with the SPX, and I'm doing this a little different this time. I just wanted to show the ATR. So this is the daily chart of the S&P with ATR. There's a 20 period ATR in red. And then I've got an 18 MA overlaid on top of that. So when this line is rising, it's telling you that volatility is increasing. So just to give you an idea, so if I were to go back to November 19th, the average range, trading range, including gaps, on the S&P was about 37 points a day. And now it's up to 57 points. It reached a peak here a couple days ago, almost 60 points per day. So we've gone from, like I say, 37 up towards 70, up towards 60. And so volatility is increasing. And when that takes place, it typically means that risk is elevated. And so I want to just make sure I let you guys know that. Now, we've reached this point up here where it's very possible that this is going to come down some and maybe meet up with the moving average or even come down through the moving average because it's made a decent sized move in a short period of time. And also, I'm going to go into what I think is going on the daily chart, and that'll sort of explain why I think this could end up dropping down a little bit. However, I think we should look at the weekly, because the weekly has, this has been in a downtrend for quite some time. Really, about halfway through 2020, it peaked and has been trending lower, meaning that the volatility has been decreasing. And now all of a sudden we're starting to see signs on the weekly chart that that the volatility is going up. So again, just to give you an idea, on a weekly basis, going back to September, we were about at 94 points a week, and now we're up to 110 points a week is how much it's trading, how much its range is. So the size of these bars are growing. And so I think this is just important. And we go back and look, this is no small thing. When we get through this line to the upside, even here, but when you get through this line, it's pretty important. Now, in this case, it ended up just being a zigzag sideways, but that was a pretty important sideways period. All the others were pretty dramatic in terms of the drop in the market that the market had. So I like to keep an eye on this. I don't use any indicator as an end-all be-all, but I do like to know what's going on from this standpoint. I think this is important. So I think we got to recognize that when we get in, we're going to go into the momentum in a minute. And I think that'll explain why that's also important. But I did want to point out the bulls minus the bears right now is 15%. So we were 35% 2 weeks ago. We have dropped down to 15% in a hurry. People are turning bearish in a hurry. So what that tells me is, yeah, based on the way the daily chart is trading, we could come down and test this area maybe, or maybe make a higher low or something like that. But I don't think with this kind of a drop in the sentiment number that we're going to get a big plummet. Well, I mean, I guess we could get a big plummet to the downside. Maybe a lot of people are looking for a correction and it ends up being a big top. But I think the more likely scenario is that this channels holds here and then maybe even test the high or kind of channel sideways, something like that, as opposed to just falling apart. So that's what I would see based on looking at that one indicator. Now, when I start to look at everything else, I do think there's some issues we've got. We've been very extended from the 18-month recently, but it's been a long time since the price has touched the 18-month line. It's going to be almost 2 years as we roll into the new year. The momentum is pretty good on the monthly chart, but on the weekly, we have a nice looking trend, but we don't have very good momentum conditions. ADX and MACD, neither one are confirming this move and really haven't been for the last 3 or 4 months. On a daily basis, the one thing I wanted to make sure I pointed out that was new this time is ADX has now dropped back down below 25. So here's my 25 line going across. And the fact that the ADX has dropped down here tells me that we're probably heading into a consolidation phase. If the momentum was strong in either direction, then red and green, or red or green, the buyers or the sellers would stay above this 25 line. And instead, they're both dropping back down below. That tells me that we should be on the lookout for, again, some type of a channeling pattern, consolidation pattern. Now, if we get ferocious selling to the downside that causes the red DI to break out and hold, something like that, causes the MACD to cross back down through the 0 line, we get some kind of a decline, that rally like that, then I'm not going to fight this and say, oh, we're staying in a range. But right now, my best guess, based on what I'm seeing, the fact that we held the 0 line on this pullback, the fact that we held the 18-week on this pullback, I mean, this 18-week line came down to it, just barely broke it, and then turned back up. So those are pretty decent signs. And the fact that we have this backdrop of the bulls minus the bears as being, I think, somewhat positive in the short term. So those are all the ways I would be looking at this. I think that the main concern I have is the momentum on the weekly and how that plays out over time. It might not be until we move into a new calendar year. Let's go to the QQQ. Very similar situation. We held the 18-week, but this time we held it basically to the penny. We touched it this week and have gotten a pretty good bounce off of it. But the momentum conditions aren't great here. They're not as bad as the spider, but they're not great. And then if we go to the daily chart, again, this overran to the downside. Now it's overrunning. I think this wants to go sideways. We've got ADX dropping down. When I see that, I'm thinking consolidation, not trend. That means channeling sideways when this drops down. Now, if it stays down for a while and we form a pattern where we can draw some trend lines going sideways or something like that, then that's a little different. Or if we get a 0 line reversal to develop, but that's going to take a couple weeks. So that's how I'd be reading this. I think it's very similar what's going on in the QQQ to the spider. The DIA, I like the rally a little bit better. This has a little bit stronger look to it, a little bit more climatic look to it, a stronger rally, and maybe this is going to come down, make a higher low, and then want to climb higher. I do want to see improvement in the green DI if that's going to happen. So it's possible this will just stay in a channel too. 360 is kind of a key level to watch, this 360 level. That was kind of where it broke down from. So if we can get back above that, that'd probably be a pretty good sign as for potential more upside. But odds are it's going to stay in a range. It just might actually outperform the other two indices in the near term. The one that concerns me the most is the IWM. And as you know, if you've been watching this channel, I was very excited to see this breakout. I thought that had really bullish connotations for the market. And unfortunately, on the pullback, it never held. I mean, look at how it just pulled back and it just flew right through this 18-day. So once you see that, then you start to question. It throws everything into question. The MACD rolled right over. ADX dropped right back down. Now, what's bugging me is that we've gone from a new high. So we went from new high here down to a new low below this prior low. So we're coming back down below this bottom here. Now look at what this looks like: a rally, a decline, and then a rally back up. And look at how strong the ADX is. And we have a little pinch that just developed and triggered to the downside. So the thing that it has going for it is we do have pretty good support underneath. So it could end up just being in a trading range, but it does look like it wants to head back down towards that 210 area. It's a concern. I don't like the big volume on the selling. So we just got to keep this in mind. Looking at these, really wasn't enough time to get invested, fortunately. I mean, it broke out and then just gave it all back. I would have been looking at the pullback and looking for an opportunity, but because of the way this came in, it just quickly told us it wasn't for real. So anyway, that is the update for the week. Go ahead and post any questions or comments, and we'll see you next time.